Hello everyone, good afternoon and welcome to the Provider Billing Forum Part 2 training. My name is Mindy Vang and I'm an analyst with the local educational agency Medi-Cal Billing Option Program, also known as LEA BOP Policy and Fiscal Unit. In today's training, the Department of Healthcare Services, also known as CHCS, will provide local educational agencies, or LEAs, and program partners an opportunity to learn about the cost settlement process and how to successfully submit the fiscal year FY 2024-25 CRCS. The training slides were sent out in advance through the LEA BOP listserv today. If you did not receive the slides, please include your name and email to the chat and an analyst will send them to you. For any questions today, you can utilize the chat by clicking on the chat icon, as you can see at the top right of this graphic. This icon is on your tools bar. Once you click on it, a chat window will open to the right side where you can type and submit your questions. You can see that chat window graphic here on the bottom right of this slide. We have a lot of content to cover today, and the chat will be monitored by DHCS to answer your questions as they come in. If your questions are not addressed during today's training, please send your questions to the LEA inbox and we will get back to you. If we have any time left at the end of this training, we will open it up for verbal questions. Also, live captions is available for those who may need it, which you can find in the More icon in your Teams toolbar, as shown in the graphic here. Click on Language and Speech, which will bring up another pop-up where you can click Show Live Captions. You will be able to view the live captions in the bottom panel of this meeting. Again, thank you all for joining the Provider Billing Forum Part 2 and CRCS training. I would like to begin with introductions acknowledging the local educational agency, Medi-Cal Billing Option Program, LEA BOP, who is here today from DHCS, and our consultants at Guidehouse. Thank you all for being here today and for your dedication to our program. Here is our agenda. Today's training will go over 6 billing-related topics, including a background on the cost settlement process, an overview of CRCS audits, the impact of the Children and Youth Behavioral Health Initiative, also known as CYBHI fee schedule program payments, on the CRCS, the impact of Assembly Bill AB 483 on audits, information to help with calculating the Medi-Cal Enrollment Ratio, also known as the MER, and then ending with a live walkthrough of the fiscal year 2024-25 CRCS. So let's dive into our first topic, a quick background of the LEA BOP cost settlement process. Let's level set with a review of key terms related to the cost reconciliation process to give everyone an idea of how the payment methodology works in the LEA BOP. Certified Public Expenditure, also known as CPE. The LEA BOP operates as a Certified Public Expenditure Program, which is a Medicaid financing approach. So this means that to participate in the program, LEAs must first use public funds for Medicaid covered services, such as staff salaries and benefits. Then at year end, LEAs report allowable costs and all the interim payments already received for services provided on their CRCS and certify that these expenditures qualify for federal matching funds. The federal government then matches the local funds spent based on the qualifying federal medical assistance percentages, also known as FMAP. LEAs receive the federal match through the cost settlement process. Interim reimbursement. Throughout the year, LEAs receive interim reimbursements for qualifying services rendered during the year. These reimbursements provide cash flow similar to an advance. And so until the final cost settlement is completed through the compliance audit. Cost settlement and CRCS. The CRCS is the report that LEAs complete to compare their allowable costs with interim reimbursements for the fiscal year. In the next slide, we will explore the CRCS in more detail. Cost settlement is the process where DHCS reconciles these amounts for the LEAs. The final audited settlement amount reflects the total reconciled amount that is due either to the LEA, known as an underpayment, or due to the state, known as an overpayment under the program. It is important to understand the cost settlement process in order to see how interim reimbursement relate to final settlements, which can help inform LEA budgeting and resource allocation. As a central piece of cost settlement, The CRCS is a mandatory requirement for providers that participate in the LEA BOP. Under our state plan, if you have signed a provider participation agreement, also known as PPA, to participate in the LEA BOP, you are required to submit a CRCS to certify your costs, even if you did not receive interim reimbursements throughout the year. LEAs will need to complete a zero reimbursement document if they do not receive any reimbursements to ensure they have met the certification compliance requirement. The form is short and available via the LEA inbox. So why does the LEA BOP use a cost and reimbursement comparison schedule, or CRCS? The CRCS is a cost report that the program uses to compare allowable costs reimbursement during the fiscal year. The CRCS is designed to estimate the cost of providing covered services and sets a cost ceiling, the maximum reimbursable amount for qualifying services each year. The cost report applies various allocation statistics, such as the FMAP percentages, which is typically at 50% for the state of California. The Medicaid Enrollment Ratio, also known as MER, which comes from the student enrollment data that is collected in October. The direct medical service percentage, the results from the random moment time survey, which will be talked about in a few more slides, and the indirect cost rate, also known as ICR, as identified by the California Department of Education. When the allocations are applied to the cost and reimbursement, then the total allowable Medicaid payments is determined, which results in the total final settlement amount. The total final settlement amount can be in a recoupment of funds if it is determined that your interim reimbursements exceed the amount of what your allowable Medicaid payment is for, or it can result in an additional federal funds owed to your LEA. So as you can see, this graphic provides a visual representation of the LEA BOP cost settlement process. It uses a simple faucet and bucket analogy to explain the process. The faucet represents the interim payments that are considered cash flow, as LEAs submit claims throughout the year that flow to the LEA provider. It is represented as the bucket. So as payments are received throughout the year, they fill the bucket, inching closer to the top, which represents the LEA's total Medi-Cal allowable costs, which are certified and calculated through completion of the CRCS. If at the end of the year the bucket is not full, meaning it has not yet met its Medi-Cal allowable costs through the interim payments cash flow, then after the audit process, the LEA will receive a final settlement that bridges the gap between the cash flow waterline and the top of the bucket. However, LEAs can't receive more than their Medi-Cal allowable costs. The HCS reimburses only up to the actual cost of providing services. So billing more doesn't mean more reimbursement. Anything above allowable costs spills over the bucket and must be paid back to the HCS. The direct medical service percentage, or DMSP, is central in helping determine an LEA's total Medi-Cal allowable cost on the CRCS. The DMSP represents the proportion of time practitioners spend delivering covered services and is calculated using data from the Random Moment Time Study, also known as RMTS. Each administrative region's DMSP is published annually on the LEA BOP website and must be used consistently within the region's CRCS submissions. When an LEA completes the CRCS, the DMSP is applied to total costs to determine the proportion that qualifies as direct medical service costs. Only personnel listed on the quarterly time survey participant TSP list are eligible to have their costs included. So it's important to reference the correct TSP list for each quarter and to ensure accuracy and compliance. Our state plan requires CHCS to reconcile all interim Medi-Cal reimbursements with each LEA's allowable costs. As we discussed earlier, if an LEA that participates in the program does not bill in a given year, they must certify to zero payment costs as part of the program requirements. The CRCS is the vehicle that is used to collect the information necessary to compare a participating LEA's costs and reimbursement. Based on the LEA's unique situation, including allowable costs and interim payments already received, the CRCS will result in either an overpayment, which occurs when the LEA has claimed more in interim payments than their allowable costs for that year, In this case, the LEA must pay back the difference to the HCS through future withhold claims. An underpayment, which occurs when the LEA has claimed less than their actual allowable costs, and the HCS owes additional funds to LEAs through the check write process. The HCS audits each LEA CRCS and determines a final payment or recoupment as final settlements. As an annual cost settlement process, the CRCS is due on an annual basis that follows a regular submission schedule each year. The next CRCS due is the fiscal year 2024-25 CRCS, which reflects services provided between July 1st, 2024 and June 30th, 2025. The fiscal year 2024-25 CRCS is due on March 2nd, 2026. So each year, DHCS begins accepting the CRCS reports from LEAs on February 1st. All submissions of the report or a request for an extension to the due date must be done through emailing the CRCS submission email address, which is listed on this slide. The interim payment amount that an LEA reports on the CRCS can be obtained from a report that will be generated each year. So for the fiscal year 2024-25 CRCS, the interim payment report will be published on the LEA BOP website in January 2026. And this report is pulled 6 months after the end of the fiscal year, even though LEAs have 12 months from the month of service to bill the claim to Medi-Cal. Because of this timing difference, the report that LEAs may use to report their interim payments may not represent your finalized payments for the year. If this is the case for your LEA, your CRCS audit will capture total final payments during the cost settlement and adjust your final settlement accordingly. So before we wrap up the cost settlement background section in this training, we wanted to quickly overview some compliance reminders. As a reminder, the cost settlement process is a mandatory requirement for participation in the LEA BOP, and LEAs must certify the public funds spent on services are eligible for federal financial participation in accordance with federal regulations. If the CRCS is not submitted, the LEA would face a 100% withhold of payments, issuance of a corrective action plan, suspension from RMTS participation, and possible termination from the LEA BOP program, as outlined in PPL 21025 as followed. Terminated LEAs cannot file past due CRCS forms, and any interim payment must be repaid to CMS. So meeting the CRCS submission requirement is essential to remain in good standing and avoid these penalties. So this wraps up this section of the LEA BOP cost settlement background. Now I would like to pass it to Luke for the next section.
Thank you, Mindy. Now that we have a solid background of the cost settlement process, let's talk about the CRCS audit process once an LEA has submitted their annual CRCS to DHCS. The CRCS submission process begins after the LEA has completed filling out their CRCS and has emailed DHCS with their submission. Each CRCS submission is either accepted or rejected. If accepted, confirmation is sent to the LEA. If rejected, the report is returned to the LEA for correction and timely resubmission. Any request for an extended timeline for submitting the CRCS past the annual due date must be made prior to the due date. All extension requests must be made to the CRCS inbox. This is lea.crcs.submission@dhcs.ca.gov and should include the reason for extension and a proposed alternate timeline for submission. We wanted to highlight some of the most common reasons CRCS submissions were rejected in fiscal year 2023 to 24 to help ensure your submission is accepted. As you can see, CRCS reports for 17 LEAs were rejected last year, which is a significant improvement from 59 LEAs in the fiscal year 2022 to 23. So great job to all LEAs. This is a great progress. The top reason a CRCS submission was rejected last year is due to a discrepancy in the reported total overpayment or underpayment amount listed on the PDF certification and in the CRCS Excel. Other reasons include incomplete worksheets, such as having missing data in required fields, inaccessible or incorrectly labeled certification pages, an incorrectly listed MPI on the CRCS, and failure to answer question 4 on if the LEA is part of a billing consortium. These rejection reasons highlight the importance of double-checking the CRCS submission package for completion and accuracy of LEA information before submitting. After a CRCS submission is accepted, all cost reports are evaluated to determine the type of audit. Based on this evaluation, the CRCS is sorted into one of three audit categories: minimal, limited, or field. A CRCS that undergoes a minimal audit will face a review of reported versus final Medi-Cal payments and an analysis of specific data elements in a desk audit format. Then, a limited audit expands the review to include a review of specific areas. Under a limited audit, the LEA must submit supporting documentation for an expanded review in a desk audit format. And lastly, a field audit is the most in-depth audit that involves an on-site comprehensive review of costs, supporting documents, statistics, and other specific areas. Regardless of the type of audit, the audit conducted can result in adjustments that fall into four main categories: corrections to the allocation statistics reported, updates to interim reimbursements received, removal of unallowable salaries and benefits reported, and removal of other unallowable costs listed on the CRCS. We will walk through each of these categories in the next few slides. The first category of common audit adjustments is adjustments to the reported allocation statistics listed on the CRCS. Adjustments in this category often stem from an incorrect distribution of claims by federal Medicaid assistance percentages, also known as FMAPs, an incorrect or missing indirect cost rate, also known as ICR, and/or an incorrect or missing Medi-Cal Enrollment Ratio, also known as MER, calculation. Most adjustments impacting the percentage of claims by FMAP grouping are minor, less than 1%. However, the most drastic adjustments occur when the LEA does not list the correct proportion of claims falling under each FMAP category on the Allocation Statistics tab of the CRCS. When this occurs, DHCS corrects the percentage of claims by FMAP category, which is generally just a correction of a simple clerical error. Let's go over an example to help explain this. In the top row of the table, you can see an audit adjustment that has a minor adjustment. Instead of keying in 76.5683, the report shows 76.5883. This minor adjustment needs to be corrected so that the percentages on the report sum up to 100%. But this is a very small adjustment and will not have much impact on the CRCS settlement amount. In the second row, you can see a more significant adjustment of over 90% because the LEA keyed in 91.5% when the amount should have been 0.915%. This significant adjustment will impact the settlement amount. So as you are entering your allocation statistics, make sure that what you've entered matches the information on the supporting report. Adjustments to the indirect cost often reflect instances where the LEA has selected the incorrect year on the table that is published by CDE. The column that is highlighted is the one that is applicable for the fiscal year 2024-25 CRCS, so be aware of that when you input data into the CRCS. The last allocation statistic that often faces adjustment is the Medi-Cal Enrollment Ratio, also known as the MER. We will be reviewing the MER calculation in more detail today, but for now, this slide shows the two factors in the MER percentage. The MER is included in the CRCS to allocate total cost to the Medi-Cal program based on the ratio of Medi-Cal enrolled students to the total count of enrolled students at the LEA. Sometimes the MER is adjusted during an audit because an LEA fails to report any information or only includes one of the two counts, either only the count of Medi-Cal enrolled students or only the total count of enrolled students. This leads to a reported 0% MER, negatively affecting calculations across the CRCS. Since the MER is a proportion of the total count of students who are Medi-Cal enrolled, it should never be a negative number, 0, or more than 100%. As a reminder, it is LEA's and vendors' responsibility to keep the data match input and output files, which support the counts that are included on your CRCS. Now onto the second category of common audit adjustments, adjustments made to an LEA's reported interim reimbursements, aka claims, for the fiscal year. The most common adjustment to interim reimbursements is increasing the amount of interim reimbursements that the LEA received for services during the fiscal year when compared to the reported amount on the CRCS. This increase is most likely due to an LEA continuing to submit claims for services rendered during the fiscal year after submission of their CRCS. This is a completely acceptable practice, as LEAs have 1 year from the date the service was performed to bill for that service. However, it is important for LEAs to know that submitting claims after submitting the CRCS may lead to some adjustments, as final settlements will need to account for those additional funds received by the LEA. In this slide, the example LEA reported that they were underpaid $25,000 on their CRCS. However, during the audit, an additional $10,000 was added to reflect claims that were paid after the CRCS was submitted. The updated amount would bring the LEA's underpayment down to $15,000. So even though this is an audit adjustment that can be significant, it is really a truing up of the amount the LEA was already paid for services rendered. The third common audit adjustment category is adjustments to allowable salaries and benefits. During the audit process, A&I reviews the reported employee costs, such as salaries and benefits, to ensure they are allowable and reimbursable costs. Examples where adjustments are made to remove unallowable salaries and benefits include 1. When an LEA includes costs for practitioners that are not on the quarterly TSP list. For example, if an LEA added a practitioner on the cost report that was not on the TSP list, this practitioner would be removed. 2. When an LEA cannot support LEA BOP covered services with documentation. And 3. When an LEA did not include federal funds on the CRCS. Before moving on to our fourth category of common audit adjustments, we wanted to pause to review the importance of maintaining supporting documentation and provide some examples. Maintaining proper documentation before an audit occurs ensures your LEA receives and keeps the funding for covered services that are already being provided to students. Proper documentation supports all the LEA BOP covered services that your LEA includes in the cost report and can help your LEA be audit ready. Timeliness for gathering documentation matters and should be collected at or near the time of the service being claimed. Some examples of supporting documentation include, but are not limited to, IEPs, IFSPs, IHSPs, or other care plans, initial assessments, even if they do not result in a care plan, prescriptions or referrals where the service is billed, documentation of the services provided, including the date and place of service, the name of the student and their Medicaid ID number, the name of the agency and person providing the service, and the nature, extent, or units of service, for example, assessment and progress reports, as well as treatment and practitioner logs. Some other examples are provider licenses or certifications that demonstrate the practitioner meets applicable LEA BOP qualification requirements, and payroll records associated with the practitioner providing the services. Please note it is important to ensure documentation is stored securely to comply with confidentiality requirements, such as HIPAA compliance. And with that, we'll now move on to our fourth category of common audit adjustments. Lastly, the fourth category of common audit adjustments is adjustments made to other costs or contractor costs. Examples of where adjustments are made to remove other costs and contractor costs include the following. 1. When an LEA includes costs for contractors that did not provide covered LEA BOP services. 2. When an LEA includes contractor costs for non-health related contractors, like a legal contractor. 3. When an LEA includes conference costs for all practitioners instead of limiting those to only the practitioners that provided LEA BOP covered services. And 4. When an LEA includes the cost of materials or supplies associated with a practitioner who is unable to provide supporting documentation for LEA BOP covered services. If you'd like to know more, check out the tips for using contractors as LEA BOP practitioners.
Now that we have discussed the audit process, we wanted to shift gears and discuss how the Children and Youth Behavioral Health Initiative, or CYBHI, fee schedule program payments will impact the fiscal year 2024 to 25 CRCS. The CYBHI fee schedule program is a separate funding stream that is a nice complement to LEA BOP funding. The CYBHI fee schedule program will reimburse LEAs for covered behavioral health services, including mental health and substance use disorder services, when those services are not identified in a student's IEP or IFSP. The fee schedule payments come from a variety of payers. These payers include the Medi-Cal managed care plans, most commercial health plans in California, disability insurers, and regular Medi-Cal. meaning Medi-Cal for individuals who are not part of a Medi-Cal managed care plan. That percentage is getting smaller and smaller every year. Claims for the CYBHI fee schedule program are processed through a third-party administrator who will send the claims to the various payers, so participants only have to send their claims to one entity. At the end of the year, Carolyn Behavioral Health will provide DHCS with a report of payments that have been made so that LEAs can include the total payments in the CRCS when their practitioners participate in both programs. Under the CYBHI fee schedule program, services are paid at a set and published rate, regardless of the cost to provide those services. The payments are considered final payments and there is no reconciliation to the LEA's cost of providing services. Participation in the CYBHI fee schedule program is accomplished using a cohort model to onboard LEAs. The first possible date of service that can be paid through the fee schedule is July 1st, 2024. Although many LEAs have completed the requirements to bill under the CYBHI fee schedule program today, the only LEAs that will need to worry about incorporating payments on the CRCS are those that billed for dates of service between July 1st, 2024 and June 30th, 2025. There are 4 possible scenarios outlined on this slide for fiscal year 2024 to 25. As we go through these, you can determine if your LEA's upcoming CRCS will be impacted. 1. If your LEA does not participate in the CYBHI fee schedule program, there is no impact on the upcoming CRCS. 2. If your LEA does participate in the CYBH fee schedule program, but did not bill for dates of service in fiscal year 2024 to 25, there is no impact on the upcoming CRCS. 3. If your LEA does participate in the fee schedule and was paid or will be paid for services rendered by practitioners that will not be on your LEA's 2024 to 25 CRCS, there is no impact on the upcoming CRCS. These are practitioners who were not on your LEA's TSP list. Finally, if your LEA participates in the fee schedule, was paid, or will be paid for services rendered in the fiscal year 2024 to 25 by practitioners that will be reported on the 2024 to 25 CRCS, you must report the total CYBHI payments for those practitioners on the upcoming CRCS. In the CRCS live demo later this afternoon, we will walk through an example of number 4, so if your LEA needs to report CYBHI fee schedule payments, you will understand what to do. As far as removing the payments on the CRCS, this will be very straightforward. Once DHCS publishes the report with total CYBHI payments, the LEA can use this report to input the data into the CRCS. The payments will be removed from the salaries and benefits on the CRCS and will never cause the salaries and benefits to fall below 0. The payments will need to be removed for employees and contractors, in the same way that federal funds would be removed. Next, we will discuss Assembly Bill 483 and the impact it has on the CRCS process. Assembly Bill 483 was chaptered in October 2023 and became effective on January 1, 2024. There are several components of the law, 2 of which specifically relate to the CRCS. First, the bill was expedited the final audited settlement timeline. Prior to January 1, 2024, the state plan dictated that final settlement must occur within 36 months of the CRCS acceptance date. Under AB 483, however, the final audited settlement timeline must be completed no later than 18 months after the CRCS is submitted. Note that there is a provision in the bill that the 18-month timeline may be extended for an additional 3 months when LEAs are still providing documentation requested by the auditor. AB 483 did not change the interim settlement timeline, which aligns with the state plan requiring interim settlements to be conducted within 12 months of the CRCS due date. For the 2024 to 25 CRCS, if an LEA filed timely, they can plan to receive an interim or final settlement within 12 months of submission, which would be by March 2027. When the settlement issued in March 2027 is an interim settlement, the LEA can expect final settlement to occur by September 2027. Secondly, AB 483 requires that DHCS provide targeted technical assistance to LEAs when their submitted CRCS settlement amount deviates 25% or more from their audited final settlement. For example, the LEA submits a CRCS showing an expected amount due to them of $100,000. AB 483 dictates that DHCS should offer technical assistance to this LEA if the final audited settlement deviated by $25,000 or more in either direction. So, if the audited settlement was $75,000 or less, or $125,000 or more, DHCS should offer technical assistance to the LEA. As you can see from the example, DHCS offers technical assistance regardless of if the audited settlement is a negative or a positive adjustment to the LEA, as the ultimate goal is that LEAs with large amounts understand why adjustments were made. The technical assistance also intends to inform future CRCS trainings and future CRCS submissions, so that all LEAs understand where and why significant adjustments are made by A&I, and can review those in the context of their own CRCS reporting. This slide compiles data that DHCS has collected around outreach and audit adjustments related to AB 483 technical assistance. We focus here on fiscal year 2022 to 23, as that is the most recent fiscal year with over 70% final settlements issued. For fiscal year 2022 to 23, out of the hundreds of participating LEAs, only 27 LEAs received audit adjustments that were 25% or greater from their reported amount. While 22 of these LEAs had negative or downward adjustments from the LEA perspective, 5 LEAs saw positive adjustments, meaning the final settlement was actually more beneficial than anticipated on their submitted CRCS. For those 5 LEAs with positive adjustments, 3 have accepted technical assistance from DHCS, and outreach is still in progress with 1 LEA. For the 22 LEAs that experienced negative adjustments, 13 LEAs have accepted technical assistance. Outreach is still in progress with 3 LEAs. Only 2 LEAs have rejected the opportunity for technical assistance, and 4 have not responded to DHCS requests. Technical assistance is helpful for talking through specific LEA findings, discussing what caused the adjustments, and offering an opportunity to provide additional clarity, tips, and resources to help the LEA in their next fiscal year submission. In addition to sharing LEA technical assistance outreach data, we wanted to overview the top reasons that led to large adjustments of over 25%. This table shows the most common reasons for negative audit adjustments among the 22 LEAs listed on the previous slide. As you can see, the top reasons for large negative adjustments relate to adjustments to the FMAP by funding category, adjustments to salaries and benefits, and adjustments to interim reimbursements. Other reasons for large negative adjustments include changes to contractor costs, adjustments to the indirect cost rates or the MER calculation, and finally a couple of adjustments related to supplies and materials and the Medi-Cal one-way trip ratio. As a reminder, remember to always verify reported amounts, check your reported allocation statistics, and ensure proper documentation of reported costs to help avoid large adjustments when possible. Next, we'll look at reasons for large positive adjustments. Similar to the table on the previous slide, this table highlights the main reasons for positive audit adjustments among the 5 LEAs that received adjustments greater than 25% for fiscal year 2022 to 23. These positive adjustments are due to the updates that increase the LEA's allowable amounts, including adjustments to the percentages by funding category, adjustments to the reported direct medical service percentage, the DMSP was either missing or reported incorrectly, or an adjustment to interim reimbursement where the LEA overreported the amount they paid during the year. There was also one adjustment related to the indirect cost rate. Even when adjustments are in the LEA's favor, DHCS offers technical assistance to help explain the changes and support accurate reporting in the future. I will now pass it over to Dana for the next section.
Thank you, Leilani. Hello, everyone. My name is Dana Ramos, and I am an analyst in the LEA BOP policy and fiscal team. One question that LEA BOP gets quite a bit is how to calculate the Medi-Cal Enrollment Rate, also known as the MER. Since this is a common area for questions, we wanted to take a moment to provide an overview of the MER and how it is calculated. The MER is applied on the CRCS to allocate total direct service costs to the Medi-Cal program. The underlying MER data is obtained for a snapshot in time based on the annual CBEDS Day, which is the first Wednesday in October every year. This snapshot date lags behind the CRCS due date by about 16 months. So for the fiscal year 2024 to 25 CRCS, Medi-Cal enrollment as of October 24 is the basis for the calculation that is used in the fiscal year 24 and 25 CRCS. The MER represents the percentage of an LEA's total students that are enrolled in Medi-Cal and eligible to receive federal matching funds. This graphic shows how the MER ratio is calculated for fiscal year 2024 to 25. First, we'll discuss the denominator, or the bottom portion of the fraction. The denominator will represent the total count of enrolled students in the LEA. This number reflects the total student enrollment count on October 4, 2024. The student enrollment is based only on students that are primarily enrolled in the LEA. Please note that you will use the CalPADS enrollment status indicator of 10 to identify primary enrollment. Next, let's move up to the numerator, or the top portion of the fraction. LEAs should have submitted their total enrollment from October 4, 2024 through the MOVEit eligibility confirmation software and received an output file. The numerator of the MER should reflect the count of Medi-Cal enrolled students from October 2024 who are eligible for federal financial participation, as only students eligible to receive federal funding may be included. As you all may be very aware of the good practices in storing documentation, we just wanted to reiterate the importance to maintain documentation throughout every step. As a general rule, files should be kept at least 10 years from the date of CRCS acceptance. Remember that those LEAs that are involved in an audit at the end of the 10-year period must still maintain records until the audit is complete. As a reminder, because you are dealing with sensitive information, it is very important that data is securely stored, including maintaining compliance with HIPAA and FERPA requirements. The MER calculation dates are consistent each year, so it's important to plan ahead and collect MER data every October on the CBEDS date. Once you've collected the information and have the input and output files, you'll want to maintain documentation that supports the counts used in the CRCS. This is important due to the 16-month period between collecting the data and submitted the CRCS. If the MER data for fiscal year 2024 to 25 was not collected, please reach out to DHCS at the provided email to discuss next steps for the upcoming CRCS. A comprehensive training has been conducted on the MER calculation process. The training materials are available at the link provided on this slide. This training will cover calculation details for each type of LEA, including independent LEAs, county offices of education, and billing consortiums, step-by-step explanation of how the MER is calculated, what data needs to be uploaded to MOVEit, and guidance on determining accurate counts for the MER formula. This training is essential for those who are responsible for calculating the MER, so please use this resource as you complete the CRCS. This concludes our provider billing form section.